what I got pulled up here is the IWM. That is the Russell 2000. This is going to, correlate with a lot of the small cap stocks here. And what I'm looking at here is the weekly time frame. This does not look good at all. So I'm going to kind of just, go on a little rant here and talk about the IWM for just a bit and what that means for a lot of these high flying, these little growth stocks that did so well in 2020 and into, the beginning of 2021 and really haven't done anything for months now. So if we just kind of look at this range here, look at this channel that we've been in, just going all the way back to around February. So you can see here, this is the little breakout where we had, all of the craze, all of these small caps, these SPACs, all of these, companies that are supposed to be the next ninth wonder of the world going forward, and everything seems like it's running. Trading stocks seems like it's very, very easy. There's a lot of things you could just buy, and in 2 or 3 days, a week, a month from now, things are higher, this, that, and the other. And then we kind of got into February, and I think that's when a lot of people really started to feel some pain. So if I just kind of, from February here, if I just kind of draw this little line here so you can get a better idea, this sort of red candle right here was, a bad week for a lot of people. Then we got this push higher, and then we did a little bit of consolidation, and then we sort of chopped back down. Oh, and then, the IWM is going to break out again. No, we're not. We got faked out. We come back down. Oh, we're pushing higher, consolidate, pushing higher. Nope, coming all the way back down. So the point that I'm trying to make here is that for over a year's time, just about going on a year, we have been consolidating to the upside, or to the sideways action. There has been no significant push to the upside, no significant push to the downside. Okay, so with that being said, right now we do have the triple Qs that are pulled back into the 50-day moving average. We've got higher inflation since 1982. We have Jay Powell talking about increasing the taper, going to be doubling up the tapering coming soon. Interest rates are flying. All of this stuff, we know what's coming. So who's not going to do good in that environment is going to be these high growth stocks, these, these speculation names, these things that, these companies that maybe are not going to be profitable until 2025, until 2030. So their balance sheet is not going to look the best. Are they going to bring in revenue? Are they going to have sales? Yes, but are they profitable? No. When are they going to expect to be profitable? Maybe 5, 6, 7 years down the road. Those type of names are getting hammered. A fan favorite, DraftKings stock put in, highs of, I believe, $70, $75. This stock is trading at $27. Corsair was trading a lot higher than what it was trading at now. Your AMCs, your GameStops of the world are also, a lot lower today than they were. Your things like Fubo TV, highs of $65, $50 are down trading at $15, $16. SoFi down trading at $14, $15, $16. So it's like, if you really take a look at it, okay, what's going on right now on the weekly time frame on the IWM is not good. So what you can see here is that after this year-long consolidation period, we got this breakout on a good volume candle here in the beginning of December. And the exact date, if I could just pull this up, the exact date, actually in the beginning of November, the exact date is November the 1st. And we had this week of just awesomeness where we just broke out. It looked like this was finally breaking out of this year-long consolidation. All of these growth stocks and the small caps are going to come flying along with it. And this was just a fake out amongst fake outs. Now, if you're a day trader or a scalper, sometimes if you're kind of looking at this chart, right? Let's say this is a 5-minute chart, or, even a 15-minute chart or a 1-minute chart, and you're kind of looking at this chart, you would expect after a big push higher, consolidation sideways, and then finally we get a breakout, that this is going higher. This is going to turn this 234 back into a level of support, which was previously almost a year long of just consolidation and resistance, that we're going to turn this into support and then push higher, getting up here into the 250 zone at this upper channel. This was a complete fake out for small cap stocks all the way around the board. Small cap stocks have not been able to get out of their way. And if we just look at what's going on here, ever since we put in those highs of around $244, we are coming on 1, 2, 3, 4, 5 weeks, a month, and going on a month and a half of just downward selling pressure. Right now, the IWM is currently trading at $213.64. This thing is ready to give up $212. If this starts to give up $212, not only are we going to get faked out on the break to the upside, but we could potentially flush on the small cap stocks and the IWM to the downside, with the next real area of support going to be a mini area of support here at around 208. But any close below 212 and no snapback after this FOMC meeting could immediately send these small caps down to 198, which is going to put a tremendous amount of strain on small cap stocks. This is going to put what could have been, January, February, March small cap stock rally, being that they've taken the last 2 to 3, 4, 5 months off of participating while the triple Qs and the SPY were pushing higher. These stocks were kind of just selling off and consolidating sideways. If we break down and we start really closing, now we're starting to build below the 50-day moving average on the weekly time frame. So here, just to give you a little bit of insight, if on the weekly time frame the index is trading below the 20 period moving average, which is a 20 SMA, okay, generally you're going to get more people who are shorting those particular stocks than going long. Okay. If we're trading below the 50 period moving average on the weekly time frame, now we're getting into our own bear market. The IWM is in its own bear market. The IWM and small cap stocks are in a bear market. Call it what you want to call it. Whether you think that these things are going to the moon or going to snap back in January or February, you got another thing coming. If these things do not hold this $210, $212 area, and they start to lose 210, 212, 208, and 200 are the next areas we're going to act as a little bit of support. If that's said and if that's done and we do lose this area, because you can see we tested it not only 1 time, 2 times, 3 times, might be a charm, and we could be coming down here. Now the problem that's going to happen is if we do that and then we decide to bounce back, a lot of people who are inexperienced are going to think IWM came down, we tagged this level, everything is great, we're back on the up and up. Wrong. This year long almost worth of consolidation is going to act as an area of resistance, where here it should have acted as an area of support and didn't. All that told us is that the IWM is going lower. Okay. So if you were holding longs and you were in this area here and we got this area that did not act as a level of support, is when we should have aggressively been starting to trim our swing positions. Unless you plan on holding these stocks 5, 10, 15, 20 years, in this area when we could not backtest and hold is when we seriously needed to think about trimming these positions, just to start freeing up some cash flow to getting that into a little bit more safer plays that we're going to be able to buy some of the bottoms. The thing is that on a lot of these small cap stocks, the bottom is not been set yet. Okay. There is no bottom. And the sad thing about it is that when we do set a bottom, some of these stocks could sit at the bottom for the next year, 2 years, meaning that they might not see those highs from 2020 and the early 2021, if ever again, if this year or next year. So what I'm saying is that if we do start to lose this area, come down here, find a little bit of area support, chop around sideways, and then start moving back up. If we get rejected at that 212, 215 area, then this is what the chart is going to look like before we see any form of, real positivity where we can start to turn this to the upside. So with that being said, if that starts to happen, a lot of these small stock or small cap plays that you guys are in are going to have a tough time getting out of their own way. Meaning that when the IWM is doing good and those stocks that you're trading or holding are green and you think that there's going to be follow through, there is no follow through. When you're trading below the 50-day moving average on the weekly time frame, any pop, meaning any bit of bounce, green candle close, is going to be shorted that next day. Okay, that's just the way it is until it can reclaim the 50-day moving average. And right now, that 50-day moving average is setting just around $220 on the weekly time frame. If I get the exact price, around 223. So until we start to get over 223 and start to build, small cap stocks are not going anywhere. I mean, they're just not. So we have to be safe. We have to be smart about this. If you are some sort of dip buyer, what you're really waiting for is, if you're a dip buyer and you're looking to buy the dip because you want to either average down, or you think that it's a good opportunity for a specific stock to start loading in this zone, I wouldn't start loading anything until we find a definitive bottom. Okay. And what I mean by a definitive bottom is that we come down, bounce, come back up, get rejected, come back down for a second time and bounce again, and then start to clear. As soon as that happens, where we flush, retest, reject, flush, retest, and then break through, that's when I'll start loading up. That's when I would, advise myself investing into these small cap plays what to do. Now, the problem is if you start loading here because you think stocks are at a good buy, and then we flush, well, your stock is not just going to come down here. Your stock might do this, meaning that it might come a lot lower. This is an index, so this is going to account for 2,000 stocks that are in the IWM. Your specific stock could just be getting hammered on a day in, day out basis. So the bull thesis, what we want to see happen here on the IWM, we want the noise and everything with the inflation, with the FOMC meeting that's going to go happen tomorrow, with the rate of tapering and all this other stuff with the, the new variant, coronavirus variant. We want all this stuff to start to die down. And what we want to see happen here is, we want to see the IWM hold. Okay. You can see every time we kind of came down in this area, we've wicked in and we've kind of held this area. We want to hold this last line of defense. If we can hold this area, maybe consolidate 1, 2, 3 weeks, and then make another push higher where we could start to get a higher low close, and then do the same song and dance where we kind of chop around and then we make another push higher and then come back up to this 234. We're really going to need to break 234 on the IWM, back test 234 on the IWM to say that we're really going higher on the IWM. Okay. That's kind of what it needs to look like, guys. I, do my best to, kind of give you guys these levels. I'm not a bull. I'm not a bear. I'm not someone who hates on the small caps, and I'm not someone who actively trades small caps every day. I know there's a lot of people who really believe in specific companies, but at the end of the day, we do have to take a look at the technical analysis. And what the technical analysis is telling us is that the IWM is in a bear market. There's no other way to put it. We've been closed under the 50-day moving average on the weekly time frame, guys. I'm not talking about we just came down on the daily time frame. Like one day we closed, for example, the triple Qs. One day they closed at the 50-day moving average, and then they bounce, then they retest, then they bounce. I'm talking about it's been multiple weeks that small cap stocks have been trading underneath their 50-period moving average. We are stepping stones, maybe one day, 1 week away from completely losing a year-long consolidation period. If we lose this year-long consolidation period, it is not going to be good for small caps, and it's going to take even that longer for these stocks to come back. Maybe 1 year, 2 years before some of these stocks even start to remotely get back to what they were trading at prior. Okay, I hope that kind of helps. Guys, join my Discord. Give me a thumbs up on this video, subscribe to my channel, and I will see you guys all in the next video.